Silver is trading at the highest level since February. In the second quarter so far, the precious metal has gained more than 15% off the lows at the end of March, outperforming gold and is inching closer to that key $30 an ounce level. My next guest has recently increased the weighting of silver in its junior gold fund to about 40% in recent months on the expectation that it will outperform gold in the next phase. Angelos Damaskos is the CEO at Sector Investment Managers and is with me now. Angelos, thank you so much for being here. We know the uncertainty in 2020 provided pretty much the perfect conditions to drive demand for safe havens like gold and silver. But the start of 2021 and a bit before that has been a bit more challenging. So in terms of price action, silver isn't far off where we started the year. So do you see us topping 30 anytime soon?
Victoria, thank you very much for inviting me to the show. It is interesting that we have actually been in a phase of consolidation for gold and silver prices for the past 7 to 8 months. Really, it was we saw a very strong gain throughout the calendar year 2020, but it was mostly the first half of the year. In the aftermath of the pandemic conditions that people raised to the safe haven asset qualities of gold and silver. But since the recovery hopes started emerging with the vaccination process and economies thinking of opening up again, it seems that investors switched more towards the recovery cyclical economies, towards the technology sector, and generally things that benefit from the stimuli programs that are unleashed by the various governments around the world. And also base metals benefited tremendously over the last 6 months. They have outperformed almost any other commodity class. So gold and silver were sort of left behind in the last 6 months, but we are now seeing a little bit of a rotation trade coming back into the precious metals because investors realize that the current monetary conditions are unprecedented in history. And even though we have this massive stimuli program administered by the governments, the potential rise in inflation, coupled with low or negative real interest rates, which the central bank will have to maintain for the foreseeable future, really are going to provide a potential problem for the global economy as it's seeking to recover. So the reality is that the monetary base of the major world economies is being eroded, and the real earnings of corporates could suffer. So with the stock markets at already at record high valuation multiples, there could be some potential for a correction, and that could really stimulate a lot of investors to look back into safe havens and go back into gold and silver. So we wouldn't be surprised if gold tested again the recent all-time highs of $2,000 per ounce. Silver, for that matter, could not only test the $30 per ounce limit, which seems to be a little bit of a resistance, but it could also head up to 35.
So are you saying that the sort of thesis for buying gold and silver right now really depends on whether or not the equity market corrects? Because the idea that it's dependent on stock markets being at all-time highs could be seen as slightly flawed, because we've seen record highs, in 2018, in 2019, at the start of 2020. Obviously, last year was an exceptional year, but gold and silver weren't necessarily in demand at those points. Do we need a correction in order to see precious metals drive higher?
I'm not suggesting that we necessarily need to see a correction. I'm just saying that with the valuations in the stock markets at relatively high levels and investors becoming a little bit more cautious, they could be perhaps looking to increase their safe haven aspect or the hedge in their portfolio, and therefore look at gold and silver as an effective hedge for a potential correction if it should happen. So as we see the flows coming back into the safe haven assets, we think that would cause the next leg up for prices, because we all know that supply is fairly limited.
Yeah, so a lot of the proponents of buying silver over gold would point to its role in, as an industrial metal, particularly in conjunction with this green revolution. We know that's heavily endorsed by the Biden administration in Washington. Where do you stand on silver versus gold? Do you expect an outperformance?
We most certainly expect an outperformance, and silver traditionally, historically at least, has shown its tendency to outperform gold in a period of bull market conditions when the precious metals are going up. In this particular set of economic circumstances, I think the case for silver is strengthened by the physical demand created by the technology sector, the alternative energy, the electric mobility, revolution that uses a lot more silver content to build electric cars. So all of this builds up a case of not only demand by safe haven seeking investors who see silver as the cousin of gold, but it's also driven by the solid industrial demand from users of silvers, as we discussed.
And what do you make of where we're at in terms of the gold silver ratio? Last year at the height was somewhere around 125. It's now back down to about 68, so around half the peak. What can we learn from the moves that we've been seeing in terms of the ratio? What's it telling us? And do you think it's likely to correct back to somewhere nearer where it was last year?
Well, the 30-year average for the gold to silver ratio is around 60 times. So there is still some potential to revert to the so-called long-term mean of 60 times, and therefore silver classically outperformed gold even by this small reversion from the current 67, 68 times to back to 60. But we think history has also shown that this ratio has tended to drift a lot lower in times when silver outperforms gold, and it has reached as low as 40 times. So we believe that this is likely to happen again because of the fundamental demand characteristics in the particular stage of the economy for silver. And therefore, if we should see the ratio dipping down to 50 or even 50 times or even lower, that could push the silver price, even well above $35 per ounce.
So you've mentioned the levels 30 and 35, but in terms of the technical, what are some of the key sort of support and resistance we should be watching out for? 30, 35 on the upside. On the underside, what might it take for you to revise your view a bit lower?
I think it is difficult to really set these technical parameters in the current market conditions. But we have seen over the last 6 months of consolidation that $25 per ounce has proven a fairly resilient support level for silver prices. And we may have dipped a little bit lower at very short periods of time, but we think that 25 is a fairly strong support level. And if you look strictly at technicals, the silver price has actually been developing a sort of compressing upward trending triangle for the last 4 to 5 months. And this is the classic pattern in technical analysis that if it should break up, we could see a significant move towards high levels. And of course, the corollary is that if it should break down, we could see a move lower. But so far, we feel confident that $25 per ounce is quite a solid support level.
Okay, so we're looking for some kind of breakout sometime soon. Just can you give us a sense of your short-term and possibly longer-term outlook for prices, say by the end of the year? Where do you expect silver to get to?
Well, as I said earlier, I think we will see $2,000 an ounce for gold in the short term, possibly by year end. And under this sort of price scenario, silver will certainly reach $35 an ounce and possibly go even higher.
Okay, now I know you've added a couple of silver stocks to your portfolio recently. One of them is Summer Silver. Talk to us about the investment opportunity there.
Well, we have. I have to note that we have a diversified portfolio of about 65 holdings in junior gold, and as I said, 40% of that is in silver-exposed names. So these are the most recent ideas that we have added to the portfolio, taking advantage of the consolidation in the market and very attractive valuations. So Summer Silver is a company that controls tenements of the past producing Belmont vein in Nevada, which is one of the biggest producing regions for gold and silver in the Americas. It is very well capitalized. It has about $12 million of Canadian of cash on its balance sheet, and is actively drilling the prospective areas as it moves the project towards feasibility. This drilling program is producing excellent results. So apart from the prospect of developing these projects organically, and we have always, for the last year or so at least, we have favored the so-called brownfield sites, which is past producing projects that could be brought to production fairly quickly and easily. These projects could be a very attractive candidate for larger companies that are looking to improve the growth profile and consolidate the region. So there is a potential for corporate activity as well.
And then the other name you mentioned is GR Silver. What's the opportunity you see here?
Yes, again, GR Silver is a silver gold developer with key assets in the Rosario district in Mexico. Mexico is the largest producing country for silver in the world. And GR Silver controls two past producing, fully permitted mines, which is currently working on to expand the reserves by extensive drilling activities. So the key thesis here, as the value is added by the resource expansion, and the drilling activities produce very good results so far, all of these resources are being consolidated into a new feasibility study to restart production. So the value addition could be substantial. It is the so-called, the famous S-curve for the mining projects, where the addition of resources and reserves towards feasibility can see a very rapid expansion of value creation. And this is a fact that is probably or very likely to be spotted by larger companies, and again encourage corporate activity either by joint ventures or outright takeovers.
All right, Angelos, it's been great chatting to you. Thank you so much for all of your analysis on gold and silver there.
Thank you, Victoria.
And that was Angelos Damaskos. He's the CEO at Sector Investment Managers. Thank you so much for watching IGTV, and you can find more from us on Twitter. We're at IGCom.